class. Welcome to EdVantage. I'm Lisa Farmer and I'm your business professor. Today, we're going to talk about the three basic types of business entities. First, we're going to identify the different types of business ownership. Second, we will compare the advantages and disadvantages of sole proprietorships, the advantages and disadvantages of different types of partnerships, and last, the advantages and disadvantages of corporations. So let's get started. The major forms of business ownership that we see are three types. First, a sole proprietorship, which is a business owned and usually managed as well by one person. Second, we have partnerships. Anytime two or more people are legally in business together, they become co-owners called partners. And last, we will take a look at corporations. Corporations are a separate legal entity with the authority to act and have liability apart from their owners. Let's take a look at the numbers. So in the United States, 72% of all businesses are actually sole proprietorships. However, although only 20% of the businesses we see are corporations, those corporations account for over 80% of the total receipts in the United States. So if you take a look at these numbers, you see that all three of these types of ownership have merit and are worth discussing. So let's look at, first of all, some of the benefits of sole proprietorship. So when we say sole proprietorship, think of it this way. Let's say that tomorrow morning I wake up and I decide I want to be in the window washing business. So what do? I go to Home Depot, I get a bucket, I get some suds, I get a squeegee, I'm in business as a sole proprietorship. First of all, this type of business is super easy to start. I didn't have to file any paperwork or do anything special. I just decided I'm in the window washing business. Second, I'm my own boss and I can be super proud of the business that I started, as well as I can retain all the profits myself. I don't have to file any special tax return. I just report all the income of my sole proprietorship on my own taxes. But what are some of the disadvantages of this form of business? Well, first and foremost, as a sole proprietor, I have unlimited liability. Meaning, with my window washing business, if it gets big and I hire employees, let's say one of my employees falls off a ladder and breaks their arm. Well, that person can sue me, not just the business, for everything that I own, including my home, my car, or any other asset. So that's what we mean by unlimited liability, which is one of the major disadvantages of a sole proprietorship. Also, a sole proprietorship is limited when it comes to financial resources because I'm only one person and the business is therefore limited to my own financial resources. Also, a sole proprietorship can be difficult to manage. Again, I'm only one person. I'm managing the business as well as owning it. And that's also going to limit my growth. The last thing I want to point out about sole proprietorships here is that with a sole proprietorship, if I die, my window washing business dies as well. So this business does have a limited lifespan, and that's another disadvantage. Let's move on now to talk about partnerships. Partnerships are similar to sole proprietorships, except that with a partnership, we've got two or more people involved. This can be a general partnership, meaning each of the owners shares in the daily operations of the business as well as assumes all liability for the business. Or we could have a limited partnership. In a limited partnership, one or more of the partners is a general partner, assuming full liability and full management responsibility, whereas one or more of the partners might be limited. So let's talk about the difference between a general partner and a limited partner. A general partner is an owner who has unlimited liability as well as is active in managing the firm. Whereas this limited partner invests money in the business, but typically would enjoy limited liability only to the extent that they've invested in the business. So for a limited partner, those personal assets are not at risk. Let's talk about some of the advantages of a partnership. These advantages are going to be similar to sole proprietorships, except we've now got more than one person. So whereas the sole proprietorship was limited to only my financial resources, with a partnership, we have access to the financial resources of multiple partners. Also, we have multiple people now sharing the management responsibilities as well as the skills, expertise, and knowledge that each partner brings to the table. Because we have more than one partner, we do have the opportunity for a longer lifespan of the business. And still, just like the sole proprietorship, one of the major advantages of a partnership is I don't have to file any special tax returns, separate tax returns. The income all flows through to the owners themselves. What about disadvantages of partnerships? Well, one of the major disadvantages, just again, similar to the sole proprietorship, is that unlimited liability. That's a huge issue when it comes to sole proprietorships as well as partners. Secondly, we as partners are going to have to somehow figure out how we divide the profits. Whereas the sole proprietorship, I could keep all my own profits. With a partner, we're going to have to come up with some agreements. We're probably also going to have some disagreements, and that's another disadvantage. The last thing I want to point out as far as partnerships is concerned is they can be difficult to terminate. Oftentimes, let's say I was in the window washing business by myself, you decided you wanted to join me, so we become partners in the window washing business, and now I want to move on to something else. You want to keep the business. So that can be the issue as far as disagreements as well as difficulty to terminate. So the last form of business that we're going to look at today is a corporation. A corporation is a state-chartered legal entity with its own authority to act and have liability that's separate from its owners. So I want you to think for a minute about one thing that you're born with, that you die with, something that stays with you your whole life. It never changes. You might get married, you might get divorced, it never changes. Did you think about your social security number? Because that number is essentially your identity and it stays with you your entire life. When a company incorporates, they file separate paperwork within a state to become their own legal entity, and guess what they get? They get their own number. Similar to a social security number, that number is called a federal employer identification number, and this allows a corporation to act as a separate entity. So let's talk about some of the advantages of incorporating and becoming a separate entity. First of all, now that entity has limited liability because the liability is limited to the entity itself instead of the owner's entire resources. So that is one of the major advantages of corporations. Secondly, corporations, which are owned by stock, we can discuss that further in other chapters, corporations have the ability to raise more capital or investment because we can raise capital through selling shares of stock. Another great advantage of a corporation, because it is a separate entity all on its own, it has a perpetual life. So for instance, if I incorporated my window washing business, if I die, the business can continue on, my daughter can run the business, or that kind of thing. Another great advantage of corporations is that we can easily change ownership. By the transfer or sale of stock, corporations are owned by stock, the ownership of a corporation can easily change. And last, which is again something we'll talk about in more detail later, is the separation in corporations of ownership and management. Whereas in that sole proprietorship, I was managing all the day-to-day operations of my business as well as acting as the owner. With corporations, oftentimes the owners and managers are separate. So what might be a disadvantage of corporations? Well, one of the disadvantages that I want to talk about first of all is just the initial cost. Whereas when I was a sole proprietor, I woke up, decided I wanted to start a window washing business, and that's what I did. With a corporation, I'm going to have to file some paperwork, I'm going to have to pay some filing fees, potentially some legal expenses, and that kind of thing. So it's a little more involved when it comes to the paperwork and expense of setting up a corporation. And one of the major disadvantages is what we call double taxation. Because now this corporation is a separate legal entity, the corporation is required to file its own tax return and pay taxes on the corporation's income. Now the owners will also still have to file their own individual tax returns and pay income taxes on their income as well. So we call that double taxation, and now we've got two tax returns to file. The last thing that I want to point out about a corporation is it can be difficult to terminate. Once we have this entity that is a separate legal entity with a life of its own, it's more difficult to terminate. So, just to recap, first of all, we identified the three basic types of business ownership, and then we explained the advantages and disadvantages of sole proprietorships, the different types of partnerships and their advantages and disadvantages, and last we looked at corporations, advantages and disadvantages of those. So I hope this video has helped you, and I hope to see you back here soon.